Let us continue learning how to prepare a bank reconciliation statement. Let us do one more problem on bank reconciliation statement. The question is already before you. The cash book of Ram showed a balance of rupees 4 lakh on 31st December 20, whereas the passbook showed a balance of rupees 3,73,650. It was found that three checks of rupees 20,000, 50,000, and 18,000 deposited during the month of December were not credited in the passbook till 3rd January 21. Two checks of rupees 17,000 and 45,000 issued on 29 December 20 were not presented for payment till 5th January 21. In addition to it, the bank had credited Ram rupees 600 as interest and had debited him with rupees 950 as bank charges, for which there were no corresponding entries in the cash book. Prepare BRS as on 31st December 20. So what the question is asking us, the question is asking us to reconcile the bank balance as per cash book, that is the cash book balance on 31st December 20 with the passbook balance on 31st December 20. So we are not bothered about what has happened after 31st December 20. We want to explain the difference between the balance as per cash book and the balance as per passbook on 31st December 20. Okay, so let us start preparing our bank reconciliation statement. Bank reconciliation statement of Mr. Ram as on 31st December 20 is the date. So we are preparing the BRS as on 31st December 20. Particulars. Bank balance as per cash book. The balance as per cash book was rupees 4 lakhs. You can have some add items. We will have some less items and we would have to arrive at the passbook balance. That is how we have learned. Let us start preparing our working notes. I am starting with the cash book balance, deposits, withdrawals. I am starting with cash book balance and I have to arrive at passbook balance, so I'll put a star mark here. This is my withdrawal and this is my deposit in the passbook. Debit, credit. We are starting the problem with favorable balance 4 lakh. As discussed earlier, favorable balance will increase with deposits and decrease with withdrawals. Okay. Now it was found that three checks amounting to rupees 20,000, 50,000, 18,000 deposited during the month of December were not credited in the passbook till 3rd January 21. So we have deposited three checks. As soon as we receive the check and deposit the check in the bank, we pass the entry bank account debtor to debtor account in our books. So we pass the entry to debtors. 70 plus 18, 88,000 has been recorded in the month of December. Before December we have recorded this entry, but up to 31st December there was no credit in the passbook. We are preparing BRS as on 31st December 20. So please look at the passbook up to 31st December 20. Up to 31st December 20 there is no credit entry. The credit entry appeared in January. In January the balance will reconcile, but on 31st December there is a temporary difference which we are explaining through bank reconciliation statement. So on 31st December 20 there is no credit in the passbook. The amount has not been collected. This was a favorable balance. Again a deposit is there, so the balance will increase. Relatively the balance is less. Now the question arises, what should I do to the cash book so that the balance will become equal to the passbook? Cash book balance has increased by 88,000. That is why the balance in both the books are not tallying. So to make the cash book balance equal to the passbook balance, I have to reduce cash book balance by 88,000. I'll write here checks deposited but not yet credited. Next, two checks of rupees 17,000 and 45,000 issued on 29 December 20 were not presented for payment till 5th January 21. I'll again prepare the working notes. Cash book, passbook, deposit, withdrawal and deposit. I'll put star mark to the passbook. 4 lakh. I just put a star mark here to remind myself that this has to be made equal to this. Okay. Two checks of rupees 17,000 and 45,000 issued on 29 December 20 were not presented for payment till 5th January 21. So 62,000 rupees is the value of the checks which have been issued. As soon as we issue a check, we pass the entry creditor account at R to bank by creditors 62,000. This entry has been passed before 31st December, but the creditors have not presented the check to the bank. They have not withdrawn money from the bank up to 31st December. What they have done after 31st December will not impact the balance as on 31st December. On 31st December, the status is the creditors have not presented the check and they have not withdrawn money from the bank. Up to 31st December 20, there is no debit entry in the passbook. We started with a favorable balance. There is a withdrawal, so balance is bound to reduce. Balance is relatively high here. So now, what should I do to the cash book so that it becomes equal to the passbook? Cash book balance had fallen down by 62,000. To make cash book equal to passbook, this amount has to be increased in the cash book. Check issued but not presented for payment. In addition to it, bank had credited Ram rupees 600 as interest and had debited him with 950 as bank charges, for which there were no corresponding entries in the cash book. So let us prepare the working note again. Cash book, passbook, 4 lakhs. I'll put star mark here. Bank had credited a sum of rupees 600 as interest to Ram in his passbook, but there was no corresponding entry in the cash book, so there has been no corresponding debit. We had started with a favorable balance. Credit side, another credit. Balance is bound to increase. This balance is relatively less. So what should I do to the cash book to make it equal to the passbook? Because of this entry, passbook is showing a higher balance. So if I add this amount in the cash book, then it will become equal to the passbook. Interest credited in passbook, not recorded in cash book. We had 950 rupees bank charges, that also we have to see how to deal with it. Cash book, passbook, 4 lakh, put a star mark to passbook. Bank charges is a withdrawal, hence it will be debited in the passbook. The balance in passbook has reduced, the balance in cash book is relatively higher. What should I do to the cash book to make it equal to the passbook? I have to reduce it by 950 rupees. Bank charges not recorded in cash book. Now the transactions are over, so we can complete. The total of plus items will come here. 62 plus 600 is 62,600. Add these two items and write it here. 4,62,600 The total of less items will come here, 88,950 rupees. Now we'll get the bank balance as per passbook. So this is the balance left now, and yes, that is the answer also. So 3,73,650 is the bank balance as per passbook. I hope you are getting more clarity on how to do a bank reconciliation statement problem. Suppose in the question you were not given the passbook balance. It will simply ask you calculate the passbook balance. So the answer of your bank reconciliation statement, bank balance as your passbook, will be the answer for your question. Okay. Thank you.